live stream. We have a very, very special guest with us today. This is Divya Narendra. He is famous for being one of the co-founders with the Villanova Students of Harvard Connection, which went on to be, the famous Facebook and one of the largest social network in the world. But after that, he went on to become CEO and founder of the world's largest investment community and essentially an elite investor social network that he's successfully running for many, many years. So, we're very lucky to have him. And I'll give a bit about, I'm Ignacio Palormera, CEO, co-founder of Bondex. And to give him as well, a little context, we're a Web3 professional network aimed at the blockchain industry with our aims to disrupt the entire professional network industry down the line. And the idea is to have a different revenue sharing in which we'll cut the users to be part of, the economics of being part of a professional network and giving the power back to the users and individual sovereignty, essentially. And so, we have tons of things to talk about, but I kind of want to start asking you a few questions about, that you have two good friends that you went to college with that, must have been telling you about this whole blockchain thing pretty early on. The Villanova students were obviously very famous for running Gemini, but, when was the first time you heard about Bitcoin blockchain? Was it from them? Tell me a bit about that.
Well, first, that's a good question. And Ignacio, thanks for having me on, first of all. I don't remember if it was, frankly, the New York Times article there was this article that came out. It was either the New York Times or the Wall Street Journal that said that they owned, something like 1% of all Bitcoin, which at the time was worth around $100 million. And, they hadn't really talked about it with me much, if at all, before then. But early on, they asked me to join the board of Gemini, which, today is one of the larger digital asset exchanges on which, investors can trade Bitcoin, but also many other crypto tokens. And then Gemini offers a whole bunch of other services as well, which we can talk about. But yeah, I think I just read about it in the news, and I think like a lot of people, I was just sort of like, what is this thing? It sounds a little crazy. Is it going to stick? Is this just another example of Dutch tulips? And so it's been 8 years since that have gone by, and obviously a lot's happened. But I think the community's really expanded quite a bit from the early days where it was really sort of a fringe novelty to now becoming a true asset class, albeit one where I think there's still a lot of uncertainty, but it's definitely, I think, been adopted by a lot of institutions and wealthy individuals as an actual asset class. So people are really thinking about it in terms of portfolio allocation, which wasn't the case even maybe 3 or 4 years ago. So it's been a fun ride.
That's a great answer. I mean, you have so much history. I was not aware that you were on the board of Gemini, but it makes sense. Yeah. So you must be still very close with the Villanova twins, obviously. I mean, you guys.
Yeah, I mean, we talk. We talk every week or so. And for Gemini itself, we meet once a month. And I think it's like amazing, like looking back on how Gemini came to what it is now, because when it started, it was self-funded by the twins. And so I think it's one of the few companies of its size that really received no outside capital until our most recent round, which just closed a few weeks ago. And so
I saw the papers for that. Congratulations.
Yeah. It's pretty incredible. Because, literally, we went through crypto winter, probably multiple crypto winters, and just a lot of, I think, just some pretty significant, troughs in the crypto landscape in terms of people, I think, and investors being skeptical of the long-term durability of the exchange business and of the crypto industry at large. But I think, again, over the last couple of years, especially with a lot of the money printing and some of the fiscal and monetary decisions that have taken place, and the fiscal decisions that have taken place, a lot of people around the world are starting to think like, oh, wait, this is, maybe a better form of governance. Maybe it's a better paradigm or template for sort of the economics of technology and innovation and how those economics get shared. And I think a lot of this stuff is starting to resonate with more and more people, and it's just fascinating to see.
I mean, we're in complete agreement with you here because, our point was that existing social networks, including Facebook, but also LinkedIn as a product, right?
Mm-hmm.
As the documentary Greg Hack said, is when the product is free, you are the product, your data is the product. Yet, even though the users, and, in the case of talent, which is something that you work with, are the ones that bring the most value to a network, they're usually cut out of the economics of it. Even though they're the biggest asset, they're the biggest value contributor to a network, the companies or the aggregators keep all the value. And that's something I like, for example, when I looked at SumZero in your case, is that you have an elite community of investors that have to add value in order to also get value. So it's not completely extracted from them, right? They have to collaborate.
Look, I think most companies that offer some kind of social networking feature, whether it's LinkedIn or Facebook or SumZero or Twitter, they're all grappling with this idea of, how do we bring value to our member base and our community? And the reason that's important is because that drives engagement, which ultimately drives advertising revenue if advertising is the model that's being pursued. So, in our case at SumZero, just quickly for folks who are not familiar with the platform, SumZero is the largest buy-side investment community in the world, as far as I know, that's online. And so what that means is our members typically have worked at either long-only firms or hedge funds of some sort, and they're using the site for a variety of reasons. But one of the reasons that they use the site is to access each other's insights and research. So people on SumZero will post very detailed investment memos covering thousands of companies across the globe, including crypto. And, we as a business obviously want to make sure that the quality of that content is really, really high. And so one way in which we ensure that quality is by making sure that our contributor base consists of professional investors, not, sort of day traders or, investors who are not really trained in fundamental investing. And then as far as why they share that content, at least on SumZero, there's a quid pro quo model where by sharing ideas, you get access to other people's ideas. And so as the database grows, by sharing your research, your proprietary research, you get access to a larger and larger pool of research coming from your peers. And if you value the insights of your peers, we think that's a very strong reason to participate within the community. But in addition to that, we layer in other incentives. So, for example, we have a job vault on SumZero where if you post research on the platform, it unlocks access to the SumZero job vault, where maybe if you're looking to move funds, you can apply for a job and include research as part of your application in addition to a resume. There's also a fundraising aspect to SumZero where if you're, let's say you're a small money manager and you've got 50 million under management, you want to grow that asset base, you can create a profile for your fund. And if you think about it, if you're trying to raise money, you want potential investors in your fund to understand how you think about investing. And so the best way to kind of communicate that is to share your ideas and to be transparent about how you think about investing. And so we try to layer in a lot of incentives to get people to contribute content. I think you're seeing the same thing in the social media world. I mean, Facebook's doing a lot with content creators to like literally pay them to share content. That could be rev share, it could be outright payments. YouTube does the same. A lot of these companies are now doing a lot of. I mean, YouTube's been doing this for a long time, but I think the rev share has become more and more of a standard tool within the let's call it the centralized social media world as a form of compensation. But it still has a long way to go. Like you had mentioned LinkedIn. I don't think LinkedIn has any kind of
Most
like
most
red,
definitely most definitely
you know,
not present in the professional networks, and I think that's why they
yeah.
struggle with engagement, as you said. There's no
Well, I think,
incentives
yeah,
there.
engagement is an interesting. So, like LinkedIn, I find is an interesting case study because obviously the business has grown a lot. They got acquired by Microsoft. Um, you know, like what's the guy's name who founded it?
Reid Hoffman,
Reid
you're
Hoffman. Yeah,
correct.
yeah, like he's a very smart guy. But man, when I go to LinkedIn, I am getting slammed by like just people trying to sell me stuff from all over the world, China, India, whatever. So it's like it's not an experience that unless I'm the one recruiting, like I will, I think for recruiting it's very
That's
useful.
that's the only people that find value in it is the demand side. People looking for talent, people in VCs, people that are looking for
Correct.
talent find it valuable, but the users themselves don't get a good experience, like you're saying.
I think it's look, it's not you don't go there for fun so much as maybe for professional. If you're looking for a job, I mean, I feel like that's by far the best use case for it. But I think in a sense, like maybe that's why they don't have to compensate people because or compensate users who are creating profiles because the folks who are on it like know that look, this is my like online resume, and if I want to be seen by recruiters or seen by other companies, like I have to have my profile up, and so people will I think take that part of it seriously and update their profiles.
But that leaves them vulnerable to a supply side disruption, which is where we're gambling on, right? Because even though you're saying they have to have an updated profile, people don't update their profiles unless they're looking for a job, which unless they're bad workers, they usually once every 2 years. So the
Correct.
data,
Yes.
the
Correct.
data, so it's not sticky. It's a lowly engaged user base, which makes when the demand side wants to go look for talent, it makes the whole talent acquisition process longer, and you have to spend a lot of time there looking for the talent. But we at Bondex have cracked a different incentive system by we're rewarding the users by keeping their skills up to date, doing skill verifications through assessments, uploading their resume, validating their work experience and their education. And in exchange, we're giving them tokens that give them a revenue share into the platform. And what we found is that on the supply side, we're successfully disrupting it. We launched in August, and we have over 270,000 users today on our application. So I think that I think that's interesting. But going back to SumZero, as I was looking into it before our call, I found it very interesting, and I wanted to ask you. We're kind of starting off focusing only on the blockchain industry because the labor shortages and skills gap that we have for knowledge workers now, it's incredibly amplified in the blockchain industry, especially because people that the Web3 people don't really trust LinkedIn, so they don't want to have profiles on there. So they're getting their jobs on Twitter, which is not meant for finding jobs. And so we want to fill in that gap and then expand from there and expand our offering. So you have a network of some of the smartest people in the planet, and you remind me of the 10,000 followers, and you have like a network of some of the smartest people on the planet. You got them to share their research and ideas on it, and that added value to all of them. And then you layered in other services like the recruitment, the fundraising, even allocating to the right funds when you're someone that's actually allocating investment. And so I wanted to ask you, we're starting off with the supply, then we're going to disrupt the demand with also some network effects with blockchain rewards, etc. But I wanted to ask you, how did you start the network? What service started first, and how did you expand from there?
Yeah, the first service was really idea sharing, and that is really at the core of what SumZero is. If you're an analyst at a fund, whether it's a hedge fund, a mutual fund, a VC fund, whatever, like you're paid to come up with good investment ideas. Like that's your job. That's your entire compensation structure is based on performance effectively. And so the idea that, you could access investment research coming from analysts at other funds is, I think, very compelling, because before SumZero, if you wanted to know what another analyst thought about a particular stock, you would have to know them personally, and they would just have to be willing to talk to you.
Not very
I might
scalable.
have, like obviously you can go turn on CNBC and listen to Jim Cramer talk all, he'll
How are you going to beat the market like that?
yeah, like I mean he will wax poetic about 50 stocks in 30 minutes. But if you want to know what like some guy at Tiger Global thinks about a stock, like you have to know that guy. Now, when we created SumZero, we were like, okay, let's get those guys to share research on the platform, and let's do this on a global basis, and let's do this for, every stock in the world. And so initially what I did was, because I myself was an analyst at the time, when I first came up with the idea, I was working at a $3 billion hedge fund in Boston that actually managed money for Harvard's endowment. So at the time, my colleagues and a lot of my friends were analysts in the industry. And before I was at that hedge fund, I was in banking in New York at Credit Suisse, and all of my cohort all left to go work at funds. So a lot of my professional contacts were already in asset management, and so I just kind of asked them to join as test users. I was like, hey, do you want to be a beta member at SumZero?
That's how you seeded the platform.
That's how I seeded the platform, and then I literally just got on the phone with all of these in this early group and just asked them for to post research, and just I think there's a certain degree of trust that these friends of mine or let's call them first degree connections put in me, that I would actually build this thing out, and that it would be worth their while. And I would just ask them hey, post an idea, and then who else do you know? And I spent the first year of SumZero's kind of prototype phase just on the phone and just getting lists of people who were recommended by people I knew. And so it was a very laborious, kind of tedious process, but it actually worked. And it worked because the quality of that early group of people was very high. And because the quality of that seed group was high, the content they posted was really high quality, which in turn attracted, more people. And so today, we have around 20,000 members who are, true buy-side analysts who are on the platform. It's global. And that content repository is just a treasure trove of research. So I see stuff. I mean, today I was literally reading an idea on Remax, which is a publicly traded real estate brokerage firm. And, the level of detail was amazing. And it was particularly interesting to me because I had a few weeks ago posted on a company called Compass, which is kind of a real estate tech brokerage shop that's actually grown very, very quickly over the last 9 years. And they've been building almost a Salesforce style CRM system that they give all of their agents. But to hear kind of an in-depth analysis of one of their chief competitors, very valuable to me as somebody who has a significant position in Compass. You mentioned Facebook earlier. I had posted research on Facebook in 2018, back when the stock I think was trading at $180 a share. The comments that I've gotten over the years have been fascinating. So if you're an analyst at a fund and you cover Facebook or you cover one of their competitors, just being able to read comments that other portfolio managers have on the stock, it's super, super interesting. And so anyway, it started out with quality as being kind of the number one goal. We wanted to make sure that our research was better than everything else out there. And
I think it'll be useful for people to understand that one of these research reports, and I know this from my investment banking days, on a stock will cost thousands and thousands of dollars, right? So if you want to access a research report from a bank, usually, or a sell-side research analyst, they will call you 5 to 8K a report, right? So,
and the problem with sell-side research, or what people, for listeners, what I would broadly refer to as Wall Street research, is that content. If you open up a Goldman Sachs research report and it tells you to buy Snapchat, or it tells you to buy Twitter, and it says, oh, Twitter is going to go to $100 a share, right? You have to realize that analyst works at Goldman Sachs, and Twitter is a client of Goldman Sachs. So there's
the conflict of interest.
Huge conflict of interest. And also, the analyst posting that research on that stock does not own any shares. So let's say Twitter tanks and goes from 48 to 28. Well, that analyst doesn't lose any money. But if you're the investor and you put on a position in Twitter, you've lost that money. And so there's kind of this lack of skin in the game, which is not the case with the buy side. So when you go on SumZero and you read a report on SumZero, you can be very confident that that analyst actually owns that stock. So they're there for the same ride that you might be on if you take on that same position. And again, I think the other big difference is that because our member base is contributing ideas that on an opportunistic basis, and they don't have those conflicts of interest, they will oftentimes write about stocks that are simply not covered by Wall Street. Now, why is that? Well, places like Goldman Sachs and JP Morgan, they tend to only write research on companies that generate enough trading commissions for their firms, because that's their business model, right? Like JP Morgan,
the conflicts of interest are just like keep piling on, right?
Yeah. So like, JP Morgan makes money when some hedge fund calls them up to say, I want to buy, 1 million shares of, whatever the stock might be. And if they don't make that phone call, then JP Morgan doesn't make any money off of that client. And so they're not going to want to, hire a research analyst to write, a report on that stock if that stock's trading volume isn't high enough. So there's a huge amount of the publicly traded world that is not researched. Now the same is true for crypto. And like one of the reasons why I think crypto has become a more important part of the overall SumZero research database is that there is no institutional coverage of crypto, right? Like, yeah, you can get a Bitcoin report from a JP Morgan or a B of A, but let's say you want to hear what people have to say about Solana or even Ethereum. Ethereum's not that well covered, broadly speaking, by institutions. Most people don't really understand like what Ethereum really is and how, for example, the transition to proof of stake works and what it means from a supply-demand standpoint. If you go on SumZero, there's an 80-page memo on Ethereum with an incredibly long comment stream on top of it, and all kinds of updates that I think really explain things in a manner that really gets to the heart of valuation. So it's the opposite of the pump and dump stuff that you see on YouTube. When I go to YouTube, I'm getting thrown so many stock and crypto related videos where people try to talk about they're just talking their book on whatever it might be, Palantir, but none of these folks, or very, very, very few of them, have any idea what they're talking about because, they're not trained in valuation. They don't necessarily
I think they have the same conflict of interest as well. You pay an influencer to shill a certain.
They're getting paid for views, right?
Yeah.
They're not getting paid to make good investments, and they don't often have like significant skin in the game. But there are a few exceptions. Like for example, people like to listen to Raoul Pal and Michael Saylor because, they have a lot of skin in the game. But again, that's Bitcoin and Ethereum, but it's somewhat of a cursory soundbite oriented look at those tokens. But if you want like in-depth, like real research on this stuff, you got to look beyond the pump and dump kind of hype stuff that you see on the internet. And that's where SumZero comes in. And we're very focused on making sure that, the content quality is very high.
Well, to all our viewers here, and I'm sure we have a few buy side or crypto buy side. I know a few of my friends who are early backers of Bondex, are hedges. I hope you're listening to this because it seems like a very, very useful resource. I feel like you've disintermediated true knowledge and got rid of all the noise, as you said, that comes from the sell side. And I think, I really like what you've done. Essentially, I mean, you've gotten rid of like the noisy middleman, and you've let true knowledge kind of help each other, right?
Yeah, I mean, it's funny. Getting rid of the noise is actually one of the lines we use, or we say cut through the noise we have this like little video that we did years ago that's I think still on our homepage.
That's definitely incepted. That's definitely incepted me. I don't think I came up with that on my own.
Well, and the other thing, it's not just Wall Street or the sell side. It's also media. Media creates enormous volatility in the markets because a lot of people trade on headlines and they don't look underneath the headline.
I think you've seen that with Omicron in the past few weeks. That's a good example of that.
It's COVID is definitely, I think, has been a saga where the media has frankly exacerbated, the reaction. But it goes beyond that. It really goes to the micro level. I mean, if as an investor, when I read about companies that are in my own portfolio and how they are being talked about in the media, the vast majority of it is just, it's opinion. It's not news. And I think, the nice thing about the analyst community is that they tend to focus on substance, right? So they consume news as do individual investors, but really it's sort of, well, what's kind of substance and what's just noise. And unfortunately with media, like the influencer model, it's largely predicated on eyeballs, right? So whether it's the Post or the Times or it's a very clickbait driven model. And so headlines tend to be more provocative than they need to be, which gets people, emotionally charged, which makes them, it compels them to make financial decisions that aren't necessarily that smart. And now in crypto, I would say it's exacerbated even more so, where you see volatility to the point where a crypto might move 90% in a short amount of time just due to headlines. And on the flip side, you have examples in crypto where there's really not much substance, and it's just all marketing.
It's one of the dangers of, I think, the industry in terms of maturity and what the asset class has, and something that worries me myself when I look at it. And I look at, there's no value behind certain projects.
Well, yeah, there's a subset of serious people in crypto, just like in any industry. Unfortunately, in crypto, that group of serious people who do real work is drowned out by all of these other.
Well, I was going to say to you, so for example, in our project, there's a lot of ex-finance guys, and we work very hard. And what we've encountered in the space is a lot of unprofessionalism and not the standards that we would operate that from third-party providers. But even to get visibility, because of the congestion in the market, we have to go through the influencer, kind of clickbait model, because there's no other way to kind of get your project out there, unfortunately, unless you're in a more mature stage. I feel like you have a very privileged view, third-party view of the traditional markets and the crypto markets because of SumZero and your spot at Gemini. You're probably one of the most privileged, I think, investors in the world to have such a bird's eye view of both industries and an understanding. I mean, I hope you're aware.
Well, I didn't know anything about crypto until I started working with Gemini, and then I was skeptical, and then I just started doing more homework into what sort of the possibilities are with the underlying technology. For the record, I'm not like a Bitcoin maximalist. Like I'm not Michael Saylor. I don't think folks should be borrowing money to go buy Bitcoin. And to me, I don't see it as like a religious movement. Some people do. I think a lot of people have almost like a religious fervor around.
It gets a bit culty here and there.
Yeah, like regarding their token of choice. But to me, I just think about this as like any technology, which is, like I don't think that they should all be viewed the same. Like there's almost like a monolithic treatment of crypto, when in fact there are thousands of different blockchains that do very different things. And so like any kind of technology, you have to research each of these individually and try to understand what are the winners, what are the losers, and why. And I think that's a research process that's challenging, requires a fair bit of like technical know-how because the stuff is pretty technical. It requires an understanding of teams. Not all teams are created equal, as we all know. And I think the marketing aspect of it is also important in crypto. But I think first and foremost, it's understanding the underlying tech. And I think that part of what's going on in the industry is amazing. Obviously, we've seen a lot with DeFi, which I still think is in the early inning. I mean, we're in the top of the first inning when it comes to DeFi.
And NFTs would be the next one, right?
Yeah, same thing with NFTs. I mean, the NFT explosion has been very fad-like so far, but it is an enduring concept. And I think the simple reason for that is like we're transitioning to a more and more digital world, and even the large central parties in the mix, the Facebooks, the Googles, they're kind of, moving closer and closer to, we throw around the term metaverse, but like it's a real thing. It's happening, and in many cases, it's already here. So
I know it's happening, and not to be too controversial, and I agree with everything you said in terms of that we're just scratching the surface with both DeFi and NFTs. I think NFTs have been fat-like with the profile, the PFPs. Hopefully, the real applications of it in the use cases with, like, for example, the legal field, or proof of participation tokens, which we are at Bondex are a big fan of in terms of getting more engagement out of our users through those and having more value in that way. But now about the metaverse, and I don't want to get too controversial, but you have your history with Mark Zuckerberg. You know what happened with the data breach with Cambridge Analytica. Would you put them in charge of building the metaverse? Because he'll
be the first to tell you he's not. I mean, they're not in charge of the metaverse. The metaverse is, and I think Mark said this, that it has the potential to be bigger than the real universe that we live in terms of the economy that exists in the real world versus the economy that could exist in the metaverse. So they'd be the first to tell you that like it's not like a one player dominates the metaverse. I think the people that narrative is just completely misplaced. That said, across if the metaverse is going to exist, you're going to need a rethinking of the payment rails, like which is where like blockchain I think comes in and can be very helpful. But there's also like the physical interaction with the metaverse, which requires hardware. And I think, like in that sort of product segment, there's no doubt Facebook, now Meta, will be a very significant player. There may be others, but I don't know if you saw the last earnings report from Facebook, but their other segment, which is just Oculus, I mean, it's pretty much Oculus, did something like $740 million in sales in the third quarter. So those are Quest 2 headsets. Now, AR glasses, which have been attempted by numerous companies. So Google obviously gave
Magic Leap.
A lot of companies have tried AR glasses. Obviously, Snapchat has their Snap goggles. Facebook took the tack of working with Ray-Ban. So now you can buy Ray-Ban Stories, which are AR. Yeah. Right now, it's really just a camera. There's nothing AR about it. But the next gen Ray-Ban Stories will definitely be a step, into the metaverse,
into the augmented reality. And
there's no question. And I think so. For that part of the metaverse, I don't see any like decentralized player. And in fact, with hardware in general, like I have not seen decentralized models work or even be attempted. So maybe in the future that happens, but at least in the near term and probably intermediate term, you're still going to see the Apples, the Metas, the Googles being, sort of the key drivers of hardware development. Now, on the software side, you have Roblox, you have, companies like Unity that develop either software or ecosystems that are 3D and immersive and provide kind of a meta like experience. Could those be decentralized? Maybe. But all of these efforts tend to be extremely capital intensive and take years of development.
So we at Bondex are not completely decentralized. We have a distributed business model, and that's because we don't believe that every business model, like for example, hardware and what you're talking about, because of its capital intensity and that someone should probably hold the reins, especially at the early stages of a company, that everything applies to a decentralized business model. Right?
I completely agree. I think that the narrative, again, if you read the media, is like you have people in the camp of like decentralization, like everything has and then they just pit like any normal company as the sort of the villain, right? Like, oh, like Google is taking all your search data and Amazon's like whatever, hurting retailers. But the reality is that some things are better suited for centralization. And you even see that in blockchain. So for example, in blockchain, you have this problem of throughput and security, or what they call it, the trilemma, right? Like, and so you have competing blockchains to, let's say in Ethereum, that may offer higher throughput, but are not as decentralized. And they've gained some adoption, right? Like, so, Solana has become more popular. I mean, is Solana an Ethereum killer? Probably not, but like, could it be successful? Possibly, and so I think there's a spectrum, and I think it's a big enough market. Like when we use the term meta, I mean, I think the metaverse is big enough where you're going to have companies across that spectrum, and the things that can be easily decentralized, for example, like lending, may be on the right end of that spectrum. Like, I don't think you need a bank to go to lend money. And in fact, it happens every day on platforms like Aave. And so, everything is very I think application specific. And
yes,
so I don't
everything is use case specific, right?
Totally. And I don't want to generalize. I don't like making broad sweeping, predictions of how the world is going to look, but I do think that blockchain will grow as a concept. There's no question. But is it going to replace the FANGs of the world? No. I mean, I don't see that happening for quite some time. And I think all of the incumbents also recognize that, their business models might be disrupted, so they have to react, and so they have to rethink their value proposition, and that takes years. It's not like an overnight transition, but you could, in 5 years, you could be looking at the FANGs where their business models have actually changed pretty significantly. In the case of Facebook, it's already happening, but hardware is becoming a bigger part of their business. Now, it's obviously a fraction of their total sales right now, but that's changing. If you compound 100% growth after a couple of years, you're talking, a very different system altogether. And so I don't know. I don't have
but I'm super aligned with you, and I agree with you. Basically, it's use case depending, and then depending on the use case, it should have a degree of decentralization applied to it, and it's all, depending on each situation, that is going to be different. And Divya, real quick, because there's one thing that we like to do, and I want to be respectful of your time towards the end of our live streams, which is we like to take the pulse from our guests about the market. I don't know if if you can do this due to your position at Gemini, but we basically ask people, how long do you think the bull market's going to go on for? What do you think about the bear? When would you take some risk off the market? Just that I would love to hear your general view of the market.
Well, which market are you referring to?
The crypto market in this case.
The crypto market,
or both.
Look, I mean, I think of crypto as venture capital. I don't really see it as I don't have a short-term crypto view. And frankly, I don't have a short-term equity market view. I think people should look at crypto like they look at VC or angel investing, because every single, and I would even throw Bitcoin in the mix here, even though it's the oldest and has been, it's sort of the OG. I think all of these different crypto tokens are at the top of the first inning. I mean, even Ethereum, which, I remember in 2018, I actually wrote a thesis on Ethereum on SumZero talking about the dApp economy. The whole thing was about all the various things that could be built on Ethereum. And then it crashed conveniently during crypto winter. It fell 90%. But, even now with DeFi is a tiny speck of sand on a giant beach, in terms of its overall impact, right now, relative to the banking sector, which is, trillions of dollars of market cap. And then NFTs, they're in the news a lot, but how many people actually own an NFT? It's like
Well,
it's like the whales who made a ton of money, trading crypto, and no one else.
It's
Because the
interesting
rest
you
of
say
us,
that, because there's only 10,000 people who own the Bored Ape. So on average, each of them owns two. So even something that's meant to be decentralized tends to centralize towards those with money and that get there
100%.
early.
It's a very, very cultish. It's the people who are the deepest in the weeds in the industry that are the early adopters, and I don't think that we're even at the top of the first inning with respect to NFTs. Stable coins, there's so much regulatory uncertainty around that, and so much potential at the same time. And like one of the things we saw is like all this pushback with the U.S. government greenlighting DM, which was Facebook's stable coin. Like it's just a stable coin, and they can't. It's like so. Anyway, I think from the standpoint of non-stable coins, so let's just call them like traditional crypto tokens. We're super, super early. I think the valuations are very much like art. Like there's no real,
it's subjective.
There's no real, yeah. Like, like I own this token called the Graph, right? And it's very, now I don't have like a significant portion of my net worth into this, but I think it's an interesting project, right? And so what I've done, at least with my crypto portfolio, is if I like the team, if I feel like it's a serious team, and if I feel like it's a serious project, and there's a big enough TAM, like they're doing something that's got real potential, I'll buy some. And for me, that's almost like the starting point where then I start doing more research. I think I heard a quote recently. It was a George Soros quote. It's like invest first, investigate later. And the point is not to go like whole hog, bet the farm. But I think the point is, if you put some money into these liquid projects, just to kind of get you motivated to do more homework, you can kind of average into a position over time, which is something that any financial advisor would recommend, and incorporate kind of like real developments that have been that might launch with a given project. So, like with Ethereum right now, there's a lot of impatience. People are like, when are they going to do the merge? When's it going to, and like gas fees are too high, and like people flip out, but at the end of the day, like it's the largest ecosystem of its kind. For me personally, I don't see any reason why Ethereum should be worth less than Bitcoin, given the amount of activity on the platform. Because I look at these things.
That's a big statement right there.
Well, I mean, to me, I just look at a lot of these projects like I look at any social network, which is, what is the level of engagement that it's providing, right? And there's no question that Ethereum is like head and shoulders beyond everything else in terms of overall network activity, overall engagement. And so, why is it trading at half the value of Bitcoin? It obviously, was the second. People don't understand it as well. It's more complicated in some regards. But again, I'm making sort of a relative argument. I'm saying, well, Bitcoin is worth X. Ethereum is worth half that. Does that make sense? And you can kind of make this relativistic argument across all these blockchains. The problem is, on an absolute basis, the numbers are very high. And even Bitcoin, people make the argument, well, it's worth 1/10 of gold, but that's not an absolute argument. That's a relative argument, right? It's not like doing a DCF on a stock where you could say, oh, here are the cash flows. Here's the discount factor that we're going to apply, and here's what it's intrinsically worth. So that's the risk with crypto, is that the valuation framework for crypto is much more of a relative framework than an absolute framework. But with that said, if you're okay with that risk and you generally feel like, let's say the digital gold argument is a good one, and that you think that Bitcoin at $1 trillion is reasonably valued relative to gold, then it's just a matter of figuring out, well, on a relative basis, for example, there's a project called Internet Computer, ICP.
Yeah, of
Like,
course.
I think it's interesting. Why? Because first of all, when they listed on Coinbase, it was at like $450, a coin. It's just completely crashed since then. No one's talking about it, right?
I saw that. And I thought it was a cash grab from the founders, actually, or the institutions.
Yeah, who the hell? I mean, who knows? It might have been like, whatever. Like the insiders getting out, but it's literally gone from like 450 to like 40, right?
No, we saw that, and we thought the technology was good, but we saw it as a cash grab. But Divya, and I don't want to cut you short, and I hate on this, but we have to start wrapping up the TV show. I just wanted to ask you, if
no problem.
To summarize it, what would you say would the bull market hold into the new year, or you think we're coming close to a crypto winter soon?
Well, I think you're going to see a crypto winter if the equity markets start to decline. I don't think crypto itself is going to go into a winter a la 2017 or 2017, 2018 on its own. But there's no question that there's a fairly high degree of correlation between crypto and equity markets at large. So if you believe that inflation is going to be rampant and the Fed is going to start tapering aggressively,
then we're going into recession.
And we're probably going to go into a period of significant decline.
Yeah, it makes complete sense.
Look, I think Powell is a pretty smart guy, and he's pretty measured with his words. And I think it was smart on Biden to keep him versus bringing on somebody a little bit more dovish, because inflation is a real problem now. And I think Powell is going to sort of walk a tightrope to make sure that he doesn't crash the markets. And so, look, I think you've started to see that already with tech getting hit really hard. Equity markets have sort of flatlined, but technology as a sector has really sort of started to struggle. So a lot of the kind of higher flying, high multiple stocks, the Unities, the Palantirs, the Datadogs, like very recently, they've really started to kind of come down. And that's really, I think, largely been comments from the Fed and some of the sort of inflation data we're seeing, plus these variants. We're
in a complete period of uncertainty.
I mean, if you believe the variants are overblown and they're not, going to be as much of a problem as.
Sorry, by the way, I'm sorry to cut you short, but I'm gonna have to thank you for your time here. I'm being rushed because I need to run to the airport.
Oh, understood. We can catch up some other time.
But Divya, it's been fantastic to have you. We've been very privileged to have you here on the Bondex live stream, and I'd love to connect offline and chat a bit, because I see a lot of potential of some partnerships here. But thank you very much for your time, and we'll be in touch shortly. Thank you so much for your time. We're going to be publishing this. We're going to be publishing this everywhere for all our audience to see. And have a fantastic weekend as well.
All righty, you too.
Bye.
Take care.